Billionaire investor Ron Barron, who owns 4.7 million shares of Tesla stock worth around $4 billion, was interviewed this morning, and he's incredibly bullish on the opportunities for Tesla. He talked about a number of very interesting and important topics about Tesla. He shared his opinions on the Q1 earnings call, Robo taxi, Elon Musk's compensation plan, and his belief that the stock is now at the bottom. So today we're going to watch the full 15-minute video and break it down. I've got Larry Goldberg here with us. He is a longtime Tesla and shareholder. Always, he's been following, of course, with Ron Barron, has the same philosophies. Welcome, Larry.
Thank you, Herbert. I've got more than the same philosophy. I'm an investor in Ron Barron's partner funds. I have been for 8 or 9 years. He, in fact, was one of the reasons that I invested in Tesla. And I think Barron funds are now my second largest holding. And for my children, that's my investment. And my children and my grandchildren, that's my chosen investment. And so I regard Barron as one of the principal vehicles for an investor who doesn't want to actively participate in the market, but wants to make a growth investment with a certain proportion of their funds. And so I'm an avid fan, have been following him for years and years, and I'm an old fart like him.
Sure. But you're absolutely correct. There's only just a couple, maybe 2 or 3 who are big Tesla investors, but realize and understand that it's a long-term investment. Others we've seen, hype it up, dump out, and then they talk badly about the company when nothing's really changed about the long-term fundamentals of why you're investing in Tesla. Let's watch the video, and then I'll pause it every once in a while and get your thoughts on it.
Term all the way in everything we're doing. And I asked you, to not introduce me as a Tesla bull, because that sounds like the only thing about one way.
I didn't know why it said investor,
So I asked you to do, please make me an investor. I am incredibly bullish about the opportunities for Tesla, but I don't want people to think this is the only thing he does one way. And,
no, but it is your largest holding, to be
it's
fair.
Our largest
Tesla
holding
is your largest holding. SpaceX is your second largest holding.
Right.
You have a long list of investments, but these two, because you got in so early, are your 2 largest holdings.
Well, we have 400 investments, and the top 30, which was that sheet, represent about 56, 57% of our assets. And by being a long-term investor, you can actually do quite well. And it's hard for most people to do better than the stock markets. I recommend people invest in index funds, passive investing. And if you did that, that's a good way to hedge against inflation. So inflation makes everything worth twice, it costs twice as much every 14 or 15 years, 4%, 5% a year. Sometimes it gets down a little bit, but it's 4 or 5% a year for my whole lifetime. And so the way you hedge against that is investing in good growth businesses and staying with them for the long term. So 98% or 97% of our assets beat the market, 96% top 20, and 45% are the top 1%. In fact, Barron Partners Fund, the #1 fund in the United States since 2003. And that's my promotion. So Tesla. We invested in Tesla I met him in 2010.
Elon Musk.
Elon Musk. I was introduced to him, said, would you like to meet him? I said, oh yeah, I'd like to meet him. I read about him with electric cars and space, and so met him. 2010, comes to my office, and he's unshaven, 37 years old at the time. He's unshaven, he just made $100 million in PayPal, didn't have to work anymore, but working like crazy, unshaven, baggy cargo pants, clogs, hair all over the place, and talking about how he wants to have electric cars. And I was hoping that he would be successful, but I thought it wasn't very likely. And in my lifetime, 50 or 60 car companies had gone bankrupt. So 2010, continued to study and work on it. Came public, I didn't invest in it. And then now it's, but for 4 years, kept visiting and talking. And finally, I'm convinced I should be investing. And in 2014, they were doing 40,000 cars a year, and he told me, I'm visiting him in his factory, sitting in a corner with Mike Lippert, who works with me, and we were there for 2 hours, 2.5 hours, and talking. I was really prepared. I was talking about space and life, other places, and black holes and dark, and first light, 14 billion years ago, Big Bang. And so we're talking about all these things, and then Mike says, Ron, I got to go. I got another meeting, but I'll see you tonight. I said, I can't believe I'm leaving this meeting, most interesting meeting I've ever listened to. And so he leaves, and we catch up in the hotel. He says, I said, Mike, at least you were smart enough to own Tesla. He says, I don't own it anymore. He said, you don't own it after you just listened to it? You don't own it? Are you crazy? And he said, well, I sold it before we got here. And so I said, I got to own it. And the stock had just tripled. And then the stock doubled again. And I still didn't own a share. And then for the next 3 years, 2014 to 2016, after the stock had already gone up 7 or 8 times, for the next 4 years, the next 2 years, we invested $400 million. And then we've made right now about $4 billion. We had made $5 billion, and we've made about $4 billion right now. And we've sold about a quarter or a third of our stock about 3 years ago. At a price of $220 a share. It's now $160. And at that time, they had grown from 40,000 cars a year to 600,000 cars a year. And now they're doing $1.8 million. So business is 3 times bigger.
But I remember when you...
All right, so let's pause there for a second. So first of all, I think that this is an amazing investing lesson, right? This is his style, called it passive investing. He does invest quite a number of stocks, 300 plus. But it just happened that these two just overtook it. You know, he bet on the executive. He met Elon, and he was just blown away by him. He didn't, although invest right away. It sounded like it still waited 3 years, and he missed the big jumps, and yet he went all in at that point. What's your thought?
Yeah, just, now that he's given that timeline, I realize I invested in Tesla before I invested in Barron funds, but I think it was SpaceX that I invested in Barron funds before I invested in SpaceX. But look, Ron Barron is the best. He typifies the best kind of investor. He does his homework. He investigates the company. He meets the people. He forms an opinion of their capabilities, of their temperament, of the company's operations. He doesn't buy based upon some analyst's opinion. He does his homework. He does all the work that needs to be done before he makes the investment. And then when he makes the investment, he sticks with it over a very long term. I haven't seen him get out of a lot of stocks. I haven't seen him change a lot of his positions. I've seen him make a decision. And as you see with Tesla, it takes a while to make a decision, a long time. It didn't take him a year or two. It took him, 4 years. But once he's made that decision, he stays with it. Now, he did sell. When he sold because the Tesla stock had become such a large proportion of the Barron Partner Fund. That's the fund I'm in. It had become such a large proportion that it was really like a Tesla index. So he had to sell. It was just out of all proportion. Yeah, so that characterizes a good investor. Now, a lot of people trade, and that's fine. And some people have those skills. I don't. Some people love to do it. I don't. Some people have a risk capacity for that kind of thing. I don't. I just invest and I forget about what I've invested in and just let it be. That's the way to invest, and he typifies it.
Yeah. I think for disruptive technology investment that Tesla's like, either scenario works, right? Because it's going to be very volatile. So some people think that they can time it. And also, if it's disruptive, you just wait until the disruption, and then it just skyrockets at that point. So let's listen into a little bit more.
Sold a few years ago. When you sold that stake, you did it because you were worried about the portfolio being too heavily invested in one particular stock.
It's gone up 20 times, yes.
Yeah, and it's gone up 20 times. Do you hit that point again? Do you have to trim more just because you now have $3 billion? What'd you say, $4 billion? I've got $4 billion. Yeah. At $3 billion as of 3/31 today. It must be $4 billion?
It's around, I don't know, it's around $3.5–4 billion, something like that.
But the reason that you gave in the past wasn't that you didn't believe in it.
It was just too big of an investment.
It was just too big of an investment.
Yes.
Do you hit that point again?
Yes. Well, at some point, maybe. But I think SpaceX is going to be, I think we're going to make 20 times in SpaceX over the next 15 years. I think we're going to make a quadruple in the next 6 or 7. And Can it be too big? Sure. So I'm always watching.
Just because you're managing other people's money.
But I do think that we're going to get a lot more money to manage, so therefore it's going to get diluted down by the new money coming in. Always thinking about how large the position should be. Yes, but
so what do you think right now? The stock came out, the earnings this week came out. It was a disappointment for the quarter. It was the worst cash flow quarter that the company's seen in its history, but the stock was up 12% because Elon started talking about what he sees in the future and the idea of bringing out cheaper cars to go through these things. Where do you stand on what the company should be valued?
So I know Joe's not a big believer in electric cars because he likes his Porsche. But I think all the cars are going to be electric, and I think this hybrid is just a sort of a holding off action so the automobile companies don't have to lose money on the electric cars. But the electric cars, I think, is going to be all the cars 10, 15 years from now. And I think hybrids, I know you love hybrids, that's not going to last either. They're too expensive, and they're not effective enough, and they're not going to be part of the mix either. So it's going to be all electric. And so what I think is going to happen is that the reason the stock is down is not because of the quarter. The reason the stock is down...
Well, the stock's up because of the stuff that he said.
Well, the stock's down so much.
Well, it's down 35% year to date. It's down 1%, or it's up 1% over the course of the last year.
Yeah, it's not... You know, I don't worry about short term, but I do look around all the time and see everyone getting rich, and I'm not poor, but I haven't made a lot of progress in the last 3 years. So therefore, I think it's like a rubber band. I'm going to catch up again. So what I think about the reason the stock is down is because people were concerned that he was going to abandon the idea of having a low-cost car and go all into robo-taxis. That's the reason the stock is down. And then there was a report in Reuters said he's canceling this new factory that's going to make low-cost cars. $25,000 cars, competition from China. So there's only one company in China that's profitable, by the way. That's BYD, Warren's company, Buffett's company. And that's a company makes $1 billion a quarter, and our company makes $4 billion a quarter. No one else makes money. Ford loses so much. General Motors, everyone loses money on this. It's much more complicated to make these cars. It's interesting. I was talking yesterday about motors. So motors in a car cost $5,000 a car. That's what the normal, these 100-year-old companies cost them $5,000. We can make a motor for $1,000. Costs $5,000. So they get...
Yeah, but then you have to have a battery that's more expensive.
Oh, no, I'm talking about if you're making the internal combustion engine cars. I'm just talking about how stagnant businesses become and how used they are to operating the way they've always operated, that they don't look for new things to do, new ways to operating oriented toward making things cheaper. He can do things for $1,000 that other people cost $5,000. It's amazing. That's if he wanted to be an electric car, a gasoline car company. All I'm pointing out is that people get entrenched and they do things without trying to make things better and cheaper and faster all the time. There's no incentive to do that. So Munger says, "Show me the incentives, and I'll show you how people act." Mm-hmm. And that's the idea, that the incentive, what's the incentive for someone who's 55, 60, we got to get off of this. But the idea is that that's the reason stock's down. And now
So what's the reason it's going to go up and when?
Okay. Teaser. What's the reason for it to go up? But pause it there. What's your thoughts on what you heard?
I'm so pleased to see him so on point today. Mm-hmm. Some of the interviews over the last, during the pandemic period, I don't think he was as sharp as he is now. He's 2 years older than me. So I've got, I'm following in his footsteps in my little modest way. I'm just so pleased to see him so on point and so sharp and, so thoughtful. It is so weird that these young people don't actually grok the situation that the automobile industry is in. And he's trying to explain it to them, and they don't get it. It's amazing. It's amazing. But, there he is, 80 years old, and he's teaching them.
Yeah, the change and continuous improvement. And you're looking for that innovative company.
Right.
And then I like what he said about the hybrids, right? Hybrids are,
Yeah.
they're going to be,
Hybrids
early
are the
now.
worst version of both systems. The worst version of both systems. They're going to be looked upon, in the future as kind of the steam-driven vehicles of the first, years of the vehicle. I mean, look, when Henry Ford was making the Model T, there were still people building steam-driven vehicles.
Yeah. Okay, let's keep watching this. He's pretty amazing. So what's going to make the stock go up?
It's going to go up huge.
When?
And now. I mean, now is the bottom.
Okay.
And so what they're doing is they're going into robo taxis, and they're going to make the low-cost car. So they're making the low-cost car, except they're making it, they have excess capacity right now. They have capacity to make 3 million cars a year. They're making 1.8 million. So the 1.2 million cars they can make extra in an existing facility with no more capital, and they're not going to make the cars direct cost as cheaply as they did before, as they expected to. But overall, until they expect to do 5 million of these new cars.
Can I ask you a robo-taxi question? Because that is, I think, the future of this company,
yes.
and a lot of the value is reliant on that.
Mm-hmm.
The question is what you think the genuine timing of a robo-taxi that's reliant on cameras only, and this has always been the question about, can you do it with just cameras relative to what Waymo and Cruise have done, and there's been even questions about that, using the radar and the LiDAR and the whole rig that lives on those vehicles.
Well, we have a small investment in Cruise because I wanted to see what they're doing, and Waymo is, their cars are $200,000, $250,000.
Because of all of the sensors and all of
and they're trying to take cost out, and for us, it's software. And so basically, the advantage that we have right now at Tesla is that they've sold 6 million cars, and 3.5 or 4 million are collecting data. So the data is what's really valuable. They're doubling their amount of compute every 90 days.
I don't disagree with you. The question is a timing question of how quickly you can actually put these things into the wild.
I was just in California. Last Sunday, I was in Vail because I want to see what they're doing with AI in the mountain and capital spending. And then that was on Sunday. And then on Monday, I was in SpaceX in LA in the morning with some engineers and some finance people. And the afternoon, I went to Tesla, and I was with the autonomous driving people and also the compute people. And then afterwards, they said to me, Ron, would you like to see how we've made unbelievable advances? The first 11 versions had to be designed so that they had to code every single thing that happened.
Right, and now it's all AI.
It was impossible. And so therefore, they weren't making progress for 2 or 3 years. They were at a plateau. And now what's happened, they have version 12. They have all this enormous amounts of data, and now they have compute to figure out. Humans can't do it. Now they have compute to figure everything out. And so now you're on the verge with autonomous driving in your car. So I said, okay, show me. So we do the few hours, couple, 3 hours, and then before I'm going to go back to New York, I say, okay, so I want to see how it works. So we go into the parking lot, and we get into the car, and I have an analyst with me, and then they had the compute person, and they had an investor person. And so we're sitting in the car, and so where do you want to go? So I want to see Steve Jobs' house. And say, okay, so they punch in the address, and we get into the car drives around by itself. Didn't do it, all we did is punch it in. Drive around in the parking lot, goes to the road, there's traffic going both ways. It looks both ways, looking for an entry to get in, gets an entry, pulls in, makes a left-hand turn, drives right behind cars in front of us. There's a stop sign. First car stops, goes. Second car stops, goes. We pull up to the stop sign. Car looks both directions, makes a right-hand turn. Just drives. And then all of a sudden, there's a pedestrian crossing the street. The car stops to let the pedestrian cross the street. The pedestrian, I don't know if I was being set up on this, but the pedestrian waves, and then the car starts going again. Then it pulls up, then it makes a left-hand turn, and then goes in front of Steve Jobs' house. It's a nice house. It was just a house, though. I was expecting a house, but it was a house. And so stopped in front of Steve Jobs' house. Then he has that house, and he doesn't, his wife does, the house next door. Then they had looks like 3/4 of an acre for sale next door for $15 million. They don't go back.
That's a little creepy,
it drove
Ron.
all by itself. Yeah, all drove by.
Take me to stalk somebody's house.
Drove all by itself. So what's going to happen is that I thought the idea had been that you're going to sell a lot of cars. So as a result of that, once they have those cars out there, you'll sell autonomous driving. And he said the other day that he's negotiating to sell autonomous driving for some other cars too. No one has the compute, no one has the data.
That's the long-term thing. If Tesla's everywhere, just like
if they're making cars, if they're making cars, they make $7,000 in profit a car for a car they're selling for $35,000 minus the $7,500 credit.
What's your timing? But just give me the timing. That's the whole game.
Now. It's now. People think it's forever, but listen to how much you're going to make. So they're making $7,000 in profit a car for a car that they sell for. Do I have time? How much time we got here?
We're running short on time. We've got about 4 minutes.
When I say now, you believe on August 8th
they're going to make
that they're going to announce robotaxis that will be available now
for 20,000. Well, they're going to talk about it in August. 08. $20,000 car, they're going to make $40,000 or $50,000 a car a year. And if they have 1 million cars, 2 million cars, 5 million cars, they're going to make hundreds of millions of dollars.
I believe that's the promise of the company, and I think it's amazing. The reason I'm asking the question about the timing is I think there's a view that those vehicles are not comparable yet to what Waymo or the other guys are doing. And by the way, those guys can't even do it in some cities, most cities, actually.
You will be amazed at how quickly they come. I mean, maybe it's not this moment in Robo, but it's certainly this moment in autonomous.
And for the government approval that would come with that?
Well, it takes a while for all those things to happen, 2 or 3 years for everything. But they're going to make hundreds of billions of dollars a year on that business. Hundreds of billions, not including the batteries, not including the AI, not including, robots.
I'm really glad it stopped for that pedestrian. I mean, that was big when you told me it did that, because now if it hadn't, that'd be a problem, Ron, right? I mean, you were surprised it stopped for the.
Yeah, I was.
Did
pleased.
you have your foot on the brake, hovering, ready to go?
Nothing.
So you're a total believer. Like,
I'm sitting next to the guy, and it's just.
He wasn't driving.
Oh,
I wasn't driving. It was just
nobody was driving.
I got to give a couple minutes in SpaceX.
No, they have drivers.
But before you get to SpaceX, very quickly, Tesla's pay package for Elon Musk has been a huge center of controversy. A Delaware court overrode it. There's this idea.
I'm going to pause it there. We'll talk about the pay package. These guys don't get it. I can't believe this. They've been saying so many things on CNBC for so long, and they've never tried it. He was worried that it's going to hit a pedestrian. They don't understand that it can already do this. So I'm so happy that Ron Barron actually walked through every single thing. First, a couple of points. First of all, Ron gets special treatment. He gets in things I'm sure he's not able to say on TV, but he knows a lot more than we do. Go ahead. Sorry.
Look, it's very frustrating that they would have people like Gerber on, who, is really taking a political position here, whereas, there are so many people in the know who actually understand what FSD can do. I mean, Ron's discovering FSD for the first time, and God bless him, he's teaching them. But there are so many people who know FSD so well, who could actually explain it to them. But the level of innocence amongst these media people is extraordinary. I mean, I don't want to call it by a negative name. I just call it innocence. They just don't get it. It's like people talking about horse-drawn carriages versus, motorized vehicles, and, you got to have a safety man walking in front of it. This is crazy, crazy talk.
I love that he explained that he actually invested in Cruise and Waymo so they can actually understand their business. Waymo costs $250,000, and then they're going, can it do what Waymo can do? Yes, it can do. Waymo can do better than those guys. And they don't understand that Waymo is very much teleoperated as well in many scenarios and situations to get out of the corner cases. Tesla's not planning to do that. We'll see what they do. They might start off that way. And then, of course, the question is when. And Ron says now. Again, the capability of the car is getting closer and closer to it. It's not 5-10 years from now. And people still believe that. And so that's why we'll do another show on the earnings call, but they've really solidified, the Tesla and Elon.
Yeah, I think, we'll talk about the changes at Tesla that have taken place over the last couple of days, but there's no doubt that there's, this shift in realization of what's happened to FSD. So when you see what's happened to the stock price, so much of it is this realization that suddenly people are becoming aware of, and because that's how people, that's how the sort of common knowledge spreads. It happens almost, unseen. But yeah, I mean, it is extraordinary that it takes a guy like Ron Barron to have to come and tell these guys who are supposed to be the media. They're supposed to do the investigation. They're supposed to actually understand the stuff. But he's teaching that. Amazing.
I love it. Let's watch a little bit last bit about his comments about Elon Musk's compensation.
Yeah, that you can vote on it as shareholders, but I saw another article that I just read that said even if you vote on it again, it could be brought back to Delaware.
The only way
Tesla's
alive is because of this guy.
So how would you resolve it?
Well, I think that the class action lawsuit for someone who had 10 shares or something, and the lawyers wanting $5 billion, that's crazy. And so the way it seems to me is there was a contract that was arranged and arrived at and agreed to, and how do you go back on a contract? This isn't fair. And the only reason the company is surviving because the guy slept on the floor under his desk for. So let me go SpaceX. But
let's do it because we're running real short.
Oh, is that noise coming from us? It's coming from you.
Coming from my bells,
Your bells. All right.
We're right next to a church. This is France. The bell rings every hour, and then it rings at evening.
Notre Dame.
7 o'clock. Yeah.
Okay. It wasn't terrible then, because we can just hear little bits of it. All right. Thank you so much, Larry. He didn't really answer the question. What does he think about, what can happen there?
Yeah, I mean, I have very strong views on the court case, and I'm writing a piece called John Dice versus John Dice on the subject, which probably went right over your head, but I'll explain it all. Look, this court case is probably, a schism moment in American jurisprudence. There's no doubt that this is an extraordinary overreach of a court. This may mark the end of Delaware's, ruling the roost in corporate registration. There has been a move away from Delaware, from major corporations. I think this is going to speed it up dramatically.
What was your thoughts on what Elon said, though? Elon was asked that question, and he said, I guess one option is that if we generate enough free cash flow, we can buy back shares.
Yeah, he didn't.
And of course, the move to Texas could get him the preferred shares.
Yeah, let's not mix two issues up. The one issue is the court action in Delaware. Yeah. The other issue is his 25% control. There's no doubt that once they have moved to Texas, that there is an easier path forward to giving him the 25% control that many retail investors believe he should have. And nothing makes us more convinced of that than what the Delaware court has done. We think he needs to be in control because when you get crazy guys like this Gerber fella, anything can happen to this company. We've seen it happen before.
Okay, well, let's move on with that one. It's sad to see some people who are very bullish and then now very bearish only because nothing to do with the company. Nothing to do with the company. It's all because of other reasons.
Personal ambitions, ambitions.
It's terrible. Okay, thank you for that. Appreciate this. Great to see Ron Barron. Again, he's important because he's a massive investor in Tesla. He has a perspective that is aligned with disruptive technology investors like many of us do, the long-term investors. And he actually gets, preferred, he gets to see things that maybe we don't get to see.
But he is the OG of long-term investing. And for those people, and I get this question all the time, should I sell now and then buy back later, blah, blah, blah. Please listen to Ron Barron. Please read read his chairman's report every year. It's so important. It is so important. I mean, Warren Buffett is an interesting guy, but Ron Barron is the guy. I mean, in a way, he is the investor that Warren Buffett was unable to be.
Okay, that's a big statement, Larry. Wow. All right. I appreciate that. Thank you so much. Wow. Thank you so much, Larry. Follow Larry on X at Tesla Larry. Thanks, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.